Awesome. It's 2 o'clock. Hey, thank you everybody for logging in, not just on the Zoom, but on LinkedIn, Facebook, YouTube. This is our Leveraging Market Stats to Boost Your Business series. We do this every single month here at the association. We've been doing it every month for 5 years, and it's been successful because of the different leaders that come on. You know, every time I learn a lot because they have the boots on the ground. And we have one of our best leaders. If you are not following her, you should be. Her website is analytics.miami, and you can follow her. She does a great job on social media. Also, her IG is Anna_analytics. So thank you so much, Anna, for making the time out today. How are you doing? How's everything?
Super good. Thank you for having me. These
Awesome. All
are
right.
fun. We did this last year too. It's fun.
Yeah,
Good
yeah, we're gonna have a
deals
lot
and
of fun. It's gonna be
presentation.
about the next hour. We'll go over the latest statistics. But Anna, right off the top, maybe there's some new people that haven't watched the program. And I know you do a great job of, putting out what's the facts as opposed to
The
the,
clickbait.
yeah, exactly. But how would you put it into words? Why is it important for a realtor to, know the statistics happening in the market?
Listen, it's super important because our clients, the consumers, are being exposed to mainstream news every day. And mainstream news creates clickbait. They want to get clicks. And also they're failing to understand the nuance and the scale of what's happening here. So we're in a period of very rapid change. And our market is not a monolith. That's also why it's super important to understand what's happening. Segments of our market are behaving very, very differently from each other. It is the segments that are attracting the wealth and talent migration that are outperforming and that are doing great. And then meanwhile, we have these doomsday headlines in the press. Like they'd all start with this Newsweek, broken telephone off the Newsweek about a month ago. Newsweek saying condo crisis. And it was in the Daily Mail 2 days ago also. Biggest crisis since whatever, whatever. It is not true at all. And they have no data to back it up. And when the clients see this, it causes alarm. They're like, wow, what's happening? Surely the press wouldn't make this up, but they are, and it's not reflecting the truth. So as real estate professionals, it's very important that you arm yourself with real fact-driven counterpoints as to why and how certain segments of our market are performing and why it is still early days and why our market is well positioned for growth and why it's actually it's an extremely stable, strong market. It has absolutely nothing similar with what happened in the most recent crash, like, at all. But that's the part that blows my mind. Crashes and bubbles are fueled by debt, by irresponsible usage of debt. And things crash, we say the bubble pops, when the underlying assets can no longer service the debt. We have a heavy, heavy cash market with high equity in homes. This is not a bubble. This is driven by shifts in financial polarities and by wealth and talent migration. So it's really important that we all understand this so we can counter the mainstream clickbait that is out there.
Yeah, no, I love it. I love it. 100%. Great job right there. A great way to open it up. So let's go into our um, our agenda here. We're going to look at July 2024 statistics that the association is releasing to the media. We're actually going to release it the news release is going out at 3 p.m. So you guys are getting it first. And more important is about the trends, exactly what Anna said. Where's the market today and where's it going? Hey, we have more Leveraging Stats webinars coming up. We have our 2023 Miami chairman. She'll be with us on September 19th. That's the next lever. You could register right now. And this is another question that we always get. Is it being recorded? Yes, it's being recorded. And it will be available on MiamiRealtorsLive.com. And then the second question is, can I get this PowerPoint? And the answer is yes. If you could type in your email in the chat box, I'll collect all the emails and I will email you this PowerPoint. So you guys could use it and reference it, with time. Okay, and so we mentioned today we are releasing our statistics to the media and all of our graphics and our reports and videos. Try to make it simple. It will be at sfmarketintel.com. So you could just bookmark. Remember one website. Remember this one, sfmarketintel.com. All right. Okay, Anna. So I'm going to go through some of the Tri-County, some of the top indicators, what we saw in the statistics for this month, and then I'll ask you a question. So this is for Miami-Dade County, 1 million up condo sales, up 6%. Total home sales are up year over year. Let's go over to Broward. Broward 600K to 1 million condo sales are up 21%. Total home sales are up 1%. And look at it, Palm Beach County, 1 million up. Again, you're seeing a trend here. 1 million up, condo sales up 21%, and also single family home sales. So Anna, you mentioned there at the top about the condo market and the headlines that have been out there. Um, as you can see here, our 1 million and up condo sales are up. Could you elaborate a little bit further into the state and the health of the Miami condo market?
Sure. Yeah, the condo market is a great example of it serves to show two market realities. The segment of the market that is having some challenges, of course, is the one that's comprised of older housing stock, because there is that law change coming into effect in 2025 requiring associations to have reserves. So the disproportionate impact of this, of course, is being felt by older buildings that may have voted to have no reserves for many decades and defer maintenance. And now all of a sudden they're having huge increases in maintenance. People are looking to sell. They have to comply with more regulations more frequently, blah, 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 all those things. So that segment of the market, which is tends to be older inventory, tends to be less expensive. So especially for the condo market, the median price point Miami-Dade County is something around 450, 440. So older condos tend to be below that. And so obviously they're not reflected in the stat of million and up. And they're the ones that are seeing more of a surge in inventory and more of difficulty in selling and uncertainty in the future as to what will happen when their maintenance rates go up and all those things. So they're in a pickle. Like, that's reality. Older buildings that have not had reserves are in a serious bind. However, this is the other reality. They were never, even if this law change was not coming, they were never getting the incoming wealth and talent migrants, because people coming from our feeder jurisdictions, I call them, such as New York, were never looking for old inexpensive condos. They were by and large buying newer product at prime location. So the older stock was never benefiting from the wealth and talent migration, and now it's getting hit with this law change. So correct, they are challenged. However, again, that's not the whole market. You go up further in price, a new product, clearly we're seeing year over increases. And the single family home market, I'm glad you have these side by side, because there's not even any need to really segment as much there. The single family home market is not being affected by the law change. And also, when it comes to the single family home market, there's a super important distinction. We cannot add more inventory vertically. I'm going to say that again, it's big. We can't add more inventory vertically. People buy old houses, they tear them down, build new, more expensive ones, so we can replace inventory, but we can't add more. Miami is not scared to build. Thankfully, we have one of the best pipelines in the country. We have more multifamily under construction as a percentage of existing inventory than any big city in America. This is all great because we had rapid surges in rent. So all of this is going to be in the condo world. Single family, we can't build more, especially as you get prime locations. That's another divergence in a very positive story that should be in the press about our single family home market, but it's not. So
Yeah, no, exactly. When it bleeds, it leads. They lead
correct.
with the negative. Yeah, exactly. So that's why we're here. We're putting out the complete picture. That's a great recap. Okay, so let's move on to the next topic, which is another hot topic. There's mortgage rates. We have some news here as rates have fallen to probably their lowest level in more than a year. As you can see, I looked this up. 6.49% is the rate. But remember, about a year ago, or a little bit more than a year ago, it was in the sevens. So, Anna, this is great news for our market because we're a high demand, low supply. So this could unleash some more activity, right?
It could. I don't know if it certainly will, but it'll definitely have an effect towards that end, because while we're in the situation that while interest rates went up very quickly, making the cost of a mortgage more expensive, obviously, during that same time period, the median price for properties skyrocketed also. So a lot of people, yeah, are absolutely, they're stuck in their homes, because if they get something else in the area, they're going to get less house for more money and have a more expensive loan. So people stayed put, and we've seen this disappearance of inventory. So if anything, this will help. We'll see how much, but it'll have a positive effect.
Excellent. Okay. So let's move on. So these are some programs were popular back in the day, and you might see them more now. The 2-for-1 mortgage buy down program, buying mortgage points. So these are some ways to get creative. And then I wanted to get into our market fundamentals, right? So what makes Miami different from an LA, a New York, a Chicago? And so these are some of the points. So I like to go through these one by one here. So let's start with population. Take a look at here. This is from the Florida Office of Economic and Demographic Research. Our population is projected to rise. These are future buyers of our real estate, correct? And this is good news for the market.
Correct. They will need someplace to live.
Yeah, yeah, definitely. So that's the population. And then this one kind of makes Miami definitely unique is our international migration. We're not, Miami is number one in the US, but take a look at number four is Broward. So you put Miami and Broward together, it is an incredible number of international migration that really sets us apart.
Yeah, correct. And Broward's very close. That's fantastic.
Yeah. Okay, so let's talk about the companies that are moving here. I know you talked about the wealth, and I know you do a great job with, and I'll ask you a little bit later on Long Miami. I love that.
Right.
But yeah, so here are some of the companies, and these are powerhouses: Goldman Sachs, Citadel, Founders Fund, Microsoft, and really we could have added some more to this list, but
Keeps
it, it
growing.
it's really amazing. Um, and then actually, I want to get to this one here. Wealth migration. Could you put into words your idea of Long Miami and the wealth that is moving here?
Sure. What's happening now across the country is that taxpayers are voting with their feet. We have IRS data and census data that indicates migration patterns across our country, and the patterns are super, super clear. And again, I always preface this by saying that I'm a registered independent. I don't like either party, so it's not a qualitative statement. It's just simple observation. The charts are so obvious. States that had high marginal tax rates that tend almost always are blue states that were also high lockdown states have these outflows of population. They're hemorrhaging. Oh, there we go. The top feeder states. So they're hemorrhaging population, but not just any population. They're hemorrhaging taxpayers. And this is an incredibly important concept because this builds momentum. The top 1% of taxpayers in high tax jurisdictions account for over 45% of revenue. So as they leave, they create budget shortfalls at their points of departure and then similarly fuel positive growth at their points of arrival. And we're lucky enough to be one of those points of arrival. And again, we know this from IRS data, from census data, and this ties into what I talk about Long Miami, is that it is still early days and that most people haven't caught on to the magnitude of what's happening. This will not magically reverse. All these people, rather all these high value taxpayers will not all collectively decide, oh no, oh we're gonna change course. We're going back to our high tax jurisdictions. That's not happening tomorrow. It's not happening next year. I don't think it's gonna happen next 5 to 10 years. This is all gonna play out over the next 5 to 10 years because what COVID did was that it broke habits. It broke habits and it was kind of like boiling the frog to a point. All these people realized they no longer had to put up with where they were and that they could avail themselves of the internet and change how they lived and worked and led their lives. And a significant percentage of them, not everyone obviously, but on the net effect is that taxpayers are leaving high tax states that were high lockdown and we're on the receiving end of those taxpayers. And this is incredibly good for our region because this goes back to one of the key concepts I talk about for Long Miami is that entrepreneurship, creation, all of this flows. You don't kill it. If your area is hostile to it, it's not going to die. It's going to flow towards the path of least resistance. And we've become one of those places, which is why we're seeing this huge flow of business here, of entrepreneurship, all of it. So it's still very, very much early days. What we see on this chart here, of course, is the incomes, the adjusted gross incomes of households moving to Florida. And look at that. It's got up 75% versus pre-COVID. That's huge. That's a major, major shift in our country.
Yeah, major news for us, and I love how you talk about it. It's just early days, so um,
Like this is not going to reverse. Go back to the map. It's not all these people who come to Miami from New York and California aren't going to say next year, okay, the news likes to find anecdotal stories because they're kind of jealous and also our success is contrary to a lot of their identity politics, which is why you're seeing these alarmist headlines. So they're going to find anecdotal pieces saying, "Oh, my friend moved here from California and he says it's terrible and he went home." Okay, like I'm sure somebody does. That's not the point. The point is what is the net effect, the total. So the net effect of this migration is not going to magically reverse because the underlying conditions that are pushing these people out of their states and to here are not going away. People have realized that they can use the internet to recreate their lives and they no longer have to put up with the conditions at where they previously were, and that's not going to change. In fact, as the budget shortfalls widen at these feeder jurisdictions, I believe they will just increase their hostilities towards capital. It's like the Venezuela model. Like that's what's going to happen. Politicians just want to get reelected, so they're going to impose further wealth taxation and they're going to pander to the growing percentage of the populace that does not pay in. Like New York giving, migrants prepaid debit cards. Meanwhile, they're losing taxpayers. It's that type of thing.
yeah, exactly. And then I know you've talked about it in the past, but I believe you said like a small percentage, if 2% make a change, to move to Florida,
Yeah,
that
it's
2% is such a big difference.
correct. Really, I was saying is that it's important, like the tax revenues are isolated in the top 1%. Like top 1% of taxpayers account for over 45% of tax revenue in high tax jurisdictions, such as Manhattan, such as parts of California. And so if you lose, I mean, you don't have to lose all of them. You lose just maybe 10% of those people, you've decimated your tax base. And then you replace them with people who are net recipients. What have you done? And
Yeah.
that's basically what's happening. And it's not going to reverse because these trends are going to correlate to increases in crime, deteriorations in quality of life, all these things, and further polarizations at those points of departure. So it's like, and for it to reverse, all of the underlying conditions in these places would have to completely alter, including the politicians running it. And that's not going to happen. It's entrenched, unfortunately. It's going to keep playing out the next 5, 10, 20 years.
Yeah, it's not going to happen. Excellent. So I got two more. These are new graphics that our incredible design team put together. Um, what do you think about this graphic right here? 10 million and up single family home sales
Yep.
versus pre-COVID. I know there's something that you've talked about, but
Yeah.
what an explosion there in the wealth.
It's even more dramatic when you isolate on a price per square foot basis because when you
Mm.
isolate for a high price per square foot, you're really isolating for a new product because something can be old and big and still cost a lot. But when it's a really high price per square foot, it's almost always new. And so if we look at sales of single family homes past 2,000 a square foot, we're up 1,050% versus pre-COVID, the first half of this year. No,
What
it's
was
like
that? A
crazy.
thousand?
1,000, no, 1,040%. Sorry. Yeah. You look at those numbers and it looks fake. It's like, what?
Yeah.
And like and two a 1 to 2,000 a square foot, it was like 300 some percent. Yeah. It's just like the more you isolate for a new product at prime location, the more we're outperforming pre-COVID realities. And then of course the counterpoint is the older product is not, and the older product was never attracting the wealth and talent migrants, and it's getting hit in the case of condos. The older product is getting hit by the new law change coming into effect. So the market is not a monolith, and the press is only focusing on that portion that is adversely affected to create headlines. There's so many positive stories that could be told here, and they're not telling them.
Yeah. No, 100%. Okay. Um, all right, before I move on, I wanted to put in a plug for our international survey. We do this every single year. It is very important, I think, for all the members because after we get all these survey responses, we put together an international study, which we use, the association and our members use throughout the entire year. So if you guys could take some time we need our members to fill out this survey. Shouldn't take that long. It's miamirealtors.com/global. So if you guys could fill this out, it would really help the association and our members. So that's a plug there for our survey. And then, so let's talk about, this was our last survey. Like I said, we do it once a year. This is 2023. Want to ask the people here if you could put your answers. What is the top foreign country purchasing in South Florida? How many total countries purchase real estate in South Florida? And if you get this one, it'll be very impressive. Is what percentage of Florida global real estate sales are made in South Florida? So we're gonna have the answers. We'll see who wins, who could get those correct. All right, so let's get into the stats. Median sale price. And first, we should mention comes out from CoreLogic. This was August 2024 release. Miami finished #1 in the US in annual home price appreciation. Again, like what Anna, you just said that I haven't seen this in the press, but
I mean, I saw an article last week saying condo crisis, biggest crisis in 30 years, but they neglected to mention this. So yeah.
yeah. So our design team put this together. We actually this is our most popular Instagram post that we've ever had. This post on Instagram got 130,000 reach. It reached 130,000, which is incredible. So okay, let's get into the stats. Median sale prices, of course, single family are up 6%. Condos are up 1%.
And I will point out there was an article I made a refute to. I actually made a whole report refuting it. I was so annoyed. It was in Newsweek, and Newsweek was again, it was like a condo crisis thing. It was maybe a month ago. And they used data from a Realtor.com study, but the headline, the Newsweek article said Miami condo prices crashing. And I was like, what are they talking about? That's just not true. Like we're up year over year. It was the highest July on record or June whenever it came out. I was like, what? So they referenced a Realtor.com study. The Realtor.com study had a table that had an aggregate area of Miami-Dade, Pompano and something else, Fort Lauderdale. I forgot what. So it was like some aggregate, right? But the newsweek headline says Miami. It's not clear if they're talking about the city or the county. They didn't really bother themselves with specifics or citation, but it referenced that Realtor.com article. And the Realtor.com table said didn't even have prices, sale prices. It had asking prices. And it said that this aggregate area they created had an 8% drop in asking prices. And I can't even recreate that data. I ran the stats for the aggregate, and that's not true. But that's even beside the point because the Newsweek article with the headline said Miami prices crashing, not aggregate asking prices for a tri-county area. No, they made it up entirely. And I made a whole refute. I messaged them. They ignored me, of course. But I made a I made a report charting it. This is exactly it. This is not a condo crisis. It's not any crisis. Yes.
Yeah. No, yeah, I saw the video you did, and thank you. I think we appreciate that. That was
It's
the
like
way
it's
you broke that
mind-boggling. Like
down.
they're just making
Yeah.
things up. It's like with no citation. It's like, what are you talking about? How did you get these numbers? And
Yeah, and I was a reporter before this, so that's really goes against what you should be as a journalist. So um okay. Again, here's another point. This is our chief economist got this analysis, and you could see here our Miami home equity gains are nearly two times the national figure. This is if you compare 2009. If you purchase in 2009 and you sell in 2024, your equity is more than $500,000. So no, nowhere else has this type of equity, right, Anna?
yes, it's
Amazing.
pretty amazing. And again, this is the opposite of an imperiled market. We have high cash
Yeah.
usage, high levels of equity, population growth. This is not a bubble. It's like
Yeah, exactly. Definitely. Okay. Let's take a look at Broward sale prices. This again, we're releasing this to the media. Single family are up and condos are down slightly. We'll go here, median sale prices for Broward, single family are up and condos as well. Let's look historically, going back to 1994, and you could see how it bottomed in 2011 and really, Anna, since COVID 2020, with the prices have hit another level. It's amazing.
correct. And that's that wealth and talent migration. Like
Wealth
whenever
and
you see a change in data like that, you have to ask yourself what happened. So Florida always had better weather. It always had tax incentives. Those things did improve. It was more so that we have this distinct post-COVID reality as people who can avail themselves of the internet essentially are reshaping their lives. And that's the wealth and talent migration in effect.
Yeah, and it's not just in Miami, but you could look at here's Broward, the increase since 2020. You could see there on the chart, and here's Palm Beach, historically. All right, let's talk about some of the inventory. This is at the end of 2023, but Anna, yes, the we're seeing more condo inventory, but it's still not at the historical. It's still below the pre-pandemic. The inventory we still needed to
Correct.
rise more, correct?
We're still over 30% below pre-COVID levels of inventory, which again, the media does, they say spikes in condo inventory. I said, come on. Yeah, year over year, but we're still 30% below where we were in pre-COVID 2019.
Yeah,
Meanwhile, we've gained population. It's, yeah, more inventory is good.
right. So we're getting more inventory, and here's a look at a chart comparing Miami to other global cities, how much 1 million could buy. This is from the Knight Frank Wealth Report, and you can see Miami in comparison to LA and New York, London,
Correct.
how much more value, more bang for your buck.
We are still a deal and it is still early days. That's what this tells me.
Early days, definitely. All right, this one you did a great job beginning
Yeah.
how this is not a bubble, but these are some points to further back up that the incredible job you did before there. But this is comparing to 2008.
Yep. Oh, and on 2024 column, you have a point there about millennials, our largest demographic in each shelter. So that's a great point. So one stat that we have for our city, for our region, that's extremely positive from a forward-looking perspective is that according to IRS data, we have the highest number of high-value millennials moving to Miami. That's defined as millennials filing over $200,000 in taxes. So we as a city are in the are the highest recipients of those millennials, and also we have the highest per capita new business formation of any large city in America.
Oh, those are great. Yeah, those are great.
Yeah, so it's not just like
That's,
big corporations and all that stuff. We're getting young people who are looking to create their lives, create businesses. They're moving here more than other cities per capita.
yeah, that's a great point. Okay. This is a chart, why buy a home now? A lot of these points we've talked about, but I like the one that housing is not like stocks and bonds. It's a place to live and shelter, yeah. All right, so let's get into closed sales. Let's take a look at all property types. Total sales are up. Single family, like you mentioned at the top, single family incredible, up 10% for Miami-Dade, and condos down slightly overall. Let's take a look at Broward. We'll do Broward and Palm Beach. Total sales are up for Broward. Single family are up. Condos are down. In Palm Beach, total sales are down, but you can see single family are up. And that's the trend, right? I mean, the single family market across the board, the Tri-County, it is really a lot of high demand right there for single family, like you mentioned. There's not a lot of available lots, correct?
And we can't build more vertically. The city of Miami thankfully loves to build. That's a great thing. And we have the zoning for it. We have a Live Local Act, all that stuff. But when it comes to single family, all you can do is replace old with new. You can't actually really add more stock at prime locations, certainly not. So, yep.
Yeah, so across the board there, as you could see, increases. All right, so the name of the program is leveraging market stats, and one way that realtors could do it is are you using Market Watch on Matrix? It lets you see what's happening in the market in the last 7 days. A lot of stuff we have now is like backward looking, but this is more. It's a great way you can customize it with your market. Get tabs on the city and the zip code that you're trying to sell.
Market Watch is great. I look at it all the time.
You do? Okay,
Yeah,
excellent.
I love it.
Yeah. Okay, so other ways that you guys can leverage stats are using SunStats. This is a free Miami service. You could get on the gateway, and it allows you to create all these. Actually, a lot of the charts that I have in here are from SunStats. So use it as free. I mentioned number two, sfmarketintel.com. You should be able to go later on this afternoon and get all the reports. And we do have every single zip code that's for quarter two and every single city. You should be able to find that there. And then we also have RPR. That is a free Miami service, and you can get these type of information that you could get off RPR. This is what you could get from SunStats. I mean, I made this chart in literally 2 minutes. It's very user friendly. Definitely use those. All right, so new pending sales. That's the best indicator of future closed sales. Let's take a look. New pending sales are down in Miami-Dade. I believe it's a trend line across. Here's Broward County and Palm Beach. Do you often look at pending sales, Anna?
I do. But I don't like to, okay, I export things and I look at stuff year over year on a longer scales. Month over month isn't that interesting to me because months are not equal. We still have seasonality in the market. So comparing month over month action doesn't necessarily imply good or bad because the months like Q2 is always our highest transaction volume month for Miami. There's always a spike there when you chart stuff quarterly. So it's really important to look at stuff year over year versus month over month or quarter over quarter. Um, I, I don't look at pending as much as closed.
Yeah, no, I
I look
agree.
at pending, so I look at closed and I'll look at active listings and then you get absorption rate. So I look at absorption rates.
Excellent. Okay. Yeah, I definitely agree on year over year. All these stats are year over year
Yeah, yeah.
to keep this seasonality. Okay, so dollar volume, sum of all sale prices. These are amazing stats right here. This always boggles my mind. This is
Yep,
just 1 month, right? 2 billion in Dade, 1.3 in Broward, 1.7 billion in Palm Beach. And Anna, this doesn't even include new construction. So
correct.
really amazing the industry that we are part of.
It really is. That's a huge economic engine right there on so
Yes.
many levels.
All right, let's move over to months of supply. You mentioned that this is a good indicator. Typically, you want 6 to 9 months as a balanced market. Less than 6 is a seller's, more than 9 is a buyer's market. And this is how you would be able to calculate it for you could do it for your neighborhood that you're trying to sell in or zip code. And I'll give you once again, if you put your email in the chat, I will email you this PowerPoint so you could take a look at your leisure there, months of supply. But it is a trend line that we've been seeing. It has been increasing, which is good for our market. Single family is still a seller's market, but we have news here in the condos. Condos have now, they had been in the balance market, so now they're over 9, so it's a buyer's market. But again, I know this could be different if we segment the market in terms of the age of the condos, correct?
Correct. Hugely different age and price point.
Age and price point, yeah. Okay, so let's take a look at Broward. Broward total is 6.3, so that would be a balanced market. And single family is at sellers and condos in a balance.
Same.
Palm Beach, similar story there. So
Mhm.
we'll move over to 1 million and above, 11.9 months. Anna, these property, this is about normal, right? Because it takes longer to sell these 1 million and above.
Correct. Yeah, the higher up you go in price, it always takes longer to sell. They're longer days on market are accepted as good. They're just
Yeah.
fewer buyers, smaller market.
Okay. And so we'll take a look at the supply by price point. This is interesting because, it could be, a buyer's market overall, but when you break it down by price buckets, it could be a different story. So this is a good way to break it down um, by
Correct.
price point. And then, so we want to get into, so these are some of the graphics that we have on sfmarketintel.com. These are hot markets. These are the lowest months of supply, so the most in demand. And any of these cities that you'd like to talk about, or that you've noticed with more activity, or
Well, it's interesting seeing Homestead pop for the single family because that's a little bit further away from the urban core. But I think that's just a byproduct of people of prices going up and people willing to go further.
yeah, yeah. When you look at single family, that's to get a good lot, you have to go south. So that you see
Good.
Color Bay and Homestead, yeah, definitely. All right, so here's a look at Broward. The hottest cities in Broward is Cooper City, #1 for single family. Miramar is #1 in condos. Let's take a look at Palm Beach. Boynton Beach, #1, and single family, and Palm Beach Gardens, #1 in condos. Active inventory, I know that this is the one you just mentioned. Let's take a look at where we are. Again, these are new statistics that we're releasing to the media today. And again, we see this continued trend, right, Anna? The inventory is increasing, but you got to put it in perspective. It's below pre-pandemic, right?
Almost entirely correct. Yes.
Yeah. So let's take a look at that. All right, so let's sum up what we talked about so far. We talked about exactly active listings, 32.2% below the historical average. The rates are projected to decline. And this was she put this out earlier, our chief economist, Gay Corotone. She forecasted sales to rise by the end of 2024. And of course, the price appreciation continues to be what really sets Miami apart from other cities. All right, global study answers. Let's see who got them right. What was the top country purchasing in South Florida? It is Colombia, of course. Did anybody get that correct? Let me see. There, I see a question there. Are we getting the slides and recording of the class? Yes, I will email you this. Trying to um, see if anyone answered Colombia. I'm not sure. Yes, okay. I see a lot of questions about getting the PowerPoint. Yes, I will, if you type in your email, I will send this to you. Thank you guys for putting all those emails in there. So it's Colombia is #1. And then, so our second question was, how many total countries purchased real estate in South Florida? It's 52. There are not a lot of many markets that could say that. 52 countries purchased in South Florida. This was in 2023. Again, if you could fill out our new survey,
That's
breaking.
almost 25% of the world. There are about 190 some countries, depending how you count them.
Oh, there you go. I love it. Would you say 25%?
Almost, almost.
That's amazing. That's a great stat. Um, what percentage of Florida global real estate sales are made in South Florida? 47%. And what's interesting about this is check out number two, Orlando, which is an incredible city as well, but they are so far behind Miami. Um, it's really amazing how our global real estate is on another level. So
Entirely.
those are important statistics and facts for you guys to remember. All right, let's go over some of the tools that we've talked about already. SunStats, are you using this? This is a free, did I mention it's free? Um, you can get it on the Miami Gateway. You should be using that. This is another tool that for you guys is our co-branding material. You can find it at miamirealtors.com/co-brand. You could put your company logo on these 20 reasons to buy, top ranking market. We have videos there. That's another place you guys could check out. Miami Fortify. This is again, it's another free Miami service. It's our design department have created all these templates. So it's on the app and it's very easy. Once you register, you get on the app and you're able to put your headshot and your information and your company logo at the bottom. So that's available on your in your app store, Miami Fortify. All right, and so here's a look at comprehensive market reports that we'll be posting on sfmarketintel.com. We have our market focus infographics, our videos, our reports. You'll be seeing that on social media. We have a zip code reports. We have city reports. Again, that's on sfmarketintel.com, which you said at the beginning. RPR, we talked about it. The trainers. I wanted to get to this one right here, Anna. For this one, this is cross market demand is what markets are looking at Miami listings. No
Yep.
surprise, New York is all over this list, but how could realtors leverage this information?
I mean, I suppose by, targeting through their network or however they do ads or whatever it is, these geographic locations or people in these locations, because this will not turn around. And if you were to put this map next to a map showing top marginal tax rates and population migration across the country, it'll match exactly. This is what's happening.
What was that you said to put it
Yeah, like
against?
what I do is like I like to juxtapose a simple map that shows outflows, kind of like the one you showed earlier, which is the big arrows, right? Big arrows showing feeder jurisdictions and where the people are flowing, and put that next to a map that shows marginal tax rates across the country, and that's all you need to look at. It's pretty clear. And then, of course, it's a broader discussion of why this is happening and the implications, blah, blah, blah. And that's a point of discussion. People have different viewpoints, but the simple reality of what is happening is just, it's very clear. It's a very clear pattern. And then also there's a great map showing the adjusted increases in income per state. And that of course also correlates. And that goes back to those charts of income replacement that we had earlier.
Oh, I love it. Yeah, I wrote those down. That's awesome. Great. It's great. So here's Broward. This by the way is on realtor.com. If you wanted to find this, you just go into Google search and type cross market demand. It is the first thing at the top, and then you could put in whatever county. It's great detail, but exactly how you talked about marginal tax rates. Of course, New York is all over Broward, but wait until you see Palm Beach. Palm Beach, New York really loves Palm Beach. I mean, you
Yep.
have one, two,
Great.
three. You have four New York counties on this list. Uh,
And those are taxpayers. There was a stats, the IRS, for whatever reason, who knows why, they don't do it every year. For certain years, they'll, on their website, on the irs.gov, whatever it is, they have pages where you could actually get raw data and they'll segment information from filings and publish these findings. Not every year, some years, who knows why. But I think it was in 2022 they did this, and it's there. It's on the government website, and they kind of partitioned incomes of people who are leaving various places for other places. And the median or average, I forgot what it was. It doesn't matter. It was very high for Palm Beach County going to sorry, for New Yorkers, Manhattanites going to Palm Beach County was over $1.2 million. Like those are the rich New Yorkers.
wow.
And if you look at the performance of Palm Beach luxury real estate, it's through the roof, all of it, because they're getting rich people from the Northeast. And then once that, I always like saying is that the state of Florida now has more assets under management than the state of Connecticut for the first time. So
Oh yeah, I love that chart that you show, the
reminds me,
assets under management. Yes.
correct. So now all these people in finance aren't per se going to Connecticut, they're coming here. That's,
Yeah.
or to Palm Beach, whatever, to South Florida. It's a question of preference, but it's that same pattern.
Yeah, definitely. Yeah, there's a lot of hedge funds. I was going to say that Palm Beach, I have seen some articles, nicknamed the Wall Street of the South. You could say the same for Brickell, but
Correct.
Palm Beach is definitely developing that. I love it. Okay. All right. So here's my information.
Well, and this is
First of
also
all,
why we get this negative clickbait press because a lot of mainstream media is based in our feeder jurisdictions and we're taking their taxpayers. So
yeah, no,
that's what's
100%.
happening. They're not happy for us, is what I'm trying to say. That's
Excellent. Okay. So here's my information, and then here is if to follow us on social media. Anna, incredible job once again. Any final points or any takeaways that you'd like to tell everybody on the Zoom and
Um,
on
just
that are
again, I
watching?
always like to emphasize this is still super early days because all the forces that are driving that migration that we've seen in all these maps, they're not changing. They're just going to get more entrenched and they're just going to build. Momentum builds. It doesn't just all of a sudden reverse course. It's just not. So this is all going to play out in the next 5 to 10 years. And that we need to again arm ourselves with information to counter the mainstream press because if it what would you say, Grace, if it bleeds, it bleeds. So that's a general point. And then on top of that, like I said, we're taking their taxpayers. They're not necessarily happy for us and we're not necessarily in accordance with their belief systems. And so a lot of we're going to keep seeing more conflated negative press that uses anecdotal data and doesn't actually, I mean, entirely fabricated headlines as we've seen. So we have to arm ourselves with this information, and the association does a great job of putting it out and just sort of have that in your back pocket when somebody calls you and says, "Oh my God, I saw an article about plunging condo prices," which is not true at all. You have this at your disposal to counter.
Excellent. I love it. And so everybody, please go to Anna's website, analytics.miami, and follow her. She does an incredible job, and also one of our best leaders here. So thank you, Anna, for making the time out. Thank you to everybody who stayed on for the entire Zoom and for we were live on LinkedIn and Facebook as well. So thank you so much, Anna. Thank you for being here. Thank you for
Chris, for the
everybody.
great presentation. It was wonderful, very informative.
Excellent. Yeah, and I will send you to everybody. I will be emailing you the PowerPoint later today. Thank you so
Awesome.
much, guys. Have a great
Thank you
day.
again. Bye bye.